Let me start by asking you some questions. How do we achieve financial freedom realistically? How do we aim towards early retirement realistically? And is it really possible to replace our incomes by the ages of 28, 35 or 40 years of age? Well, the answer is yes if it's done correctly and with discipline. So do not go anywhere, because in today's video it's all about the ultimate guide to investing and everything you need to know to set up your personal finances and aim towards that financial freedom regardless of your age or situation. So let's jump straight into it. Hey everyone, welcome to my channel. Now, disclaimer before we begin, there is no financial advice in this video, only my personal recommendations and financial preferences, which I use personally. Now, with that out of the way, let's start from the beginning. So before we begin talking about investing and all the different ways of making money and aiming towards that financial freedom, we must start from the very basic, and that is our financial education. It is so important before we begin on this journey that we have a clear understanding of why we are investing and what we are saving for and how can we achieve our short, medium and long-term goals. It's also important to note there is a real difference between saving, investing and trading. Saving is very much for the medium term, for example, holding cash within the bank, up to 12 months, perhaps you're saving for a house or a car or something within the next 12 months. Personally, I don't like to keep as much cash within the bank as inflation tends to erode the value if cash just sits there for too long. Investing is for the long term, so aiming towards financial freedom and that desired early retirement, and this happens by achieving returns on the money we invest consistently over a long period of time. Then there is trading, which is essentially buying stocks at a low entry price and waiting for the market to spike, which then a trader would look to sell and make the profit in between. Personally, this isn't something I typically do because it is higher risk, and without years of experience, the odds are never in your favor. However, in the past, yes, I have bought individual stocks, but with the intention of holding them for many years. So, as I said, the first step to any investor of any age is to educate yourself by continuously building on your financial knowledge, because the saying is true, believe me, you don't know what you don't know. And when it comes to investing your hard-earned money, believe me, you want to be 100% sure you know and understand what you're investing in, as this will reduce your risk, opposed to not knowing what you're investing in and then suddenly that investment becomes speculative and extremely high risk. And as smart investors, we are looking to preserve and grow wealth over a long period of time. So starting with the ways of learning and how you can build on that financial knowledge is to read or listen to as many financial books as possible. And my personal 4 favorites are the following: How to Own the World by Andrew Craig. And this book truly is a one-stop shop for everything you need to know about investing, and it's explained in plain English rather than the confusing jargon you might see in the Financial Times. So it's really nice and easy, and actually I have many interviews on my channel with Andrew, so do go check those out. Rich Dad Poor Dad by Robert Kiyosaki. Now this has to be one of the most famous financial investment books available. For me, this was the first book that started me on my investment journey, and it had such a positive impact. So if you haven't already, go check that out. Thirdly, Why Gold, Why Now by E.B. Tucker. Now this is only one of many books that I've listened to when it comes to investing in gold, but it's a fantastic starter book for anyone wanting to understand the importance of having gold within your investment portfolio, especially as a defensive role and insurance against inflation and any unseen market changes. So definitely one to check out. Finally, Principles by Ray Dalio, billionaire and one of the world's most successful investors. And in this incredible book, Ray shares his knowledge around systemizing your investments, the power of the compound effect, and how keeping things simple when it really comes to investing can really produce excellent returns. So there are just a select few of my favorite books to get you started. And of course, there are other excellent resources such as YouTube, podcasts, email subscriptions, etc. So as a summary, education first and foremost. Now, moving on to the next stage of investing is to look at our mindset and discipline. And why is this so important to address before we actually invest our money? Well, let's address the obvious. If you do not have discipline with money, you may as well be a gambler or high-risk investor who could potentially lose it all from a lack of discipline. And your mindset needs to be focused on your short, medium and long-term goals. Therefore, stick to the plan by applying both of these principles. Now, the next step to take is being able to conduct basic money management. So simple things such as already being able to save, not overspending on materialistic things, and never keeping keeping up with the Joneses, because if you haven't already got these basics in place, you most certainly aren't ready to invest, and that's the harsh truth. Okay, so now we're on to the exciting part, and providing you're happy with your education and knowledge, and you have the basics of money management built into you, we can now look at making strides towards setting up our personal finances. So first things first is to open up multiple bank accounts, all with different banks or building societies. Now, why would we want to have multiple bank accounts rather than just your standard current account and savings account? Well, the answer is diversification. To reduce our risk by limiting our exposure just in one bank, and most importantly, creating an automated investing system where we don't have to think about it. So whenever your income drops in, whether that be weekly or monthly, it goes out automatically into the correct accounts without you having to do anything. So the key point here is set up standing orders once all your accounts are open. So the next question is, how many accounts should we have? Well, there is no right or wrong answer, as everyone's situation will differ, but as a rule of thumb, I would say a minimum of 5 accounts, and these will consist of: 1 will be your current account, so the account that the money is received in, all of your income. 2 will be for your emergency fund, and I have a separate video on this explaining what an emergency fund is, what it's used for, and how much you should have, so go check that out, I'll include it on the screen. 3 will be your maintenance fund, or also known as a sinking fund. Again, I have a video detailing what this is. And 4 will be a general savings account, possibly a joint account between you and your partner. And finally, number 5, your fund money account. So this is the money that is left over once you've paid yourself first, and what I like to call taking care of your priority payments. At the end of what is left, that goes into the fund money account, which is typically used for meals out, family days, perhaps materialistic purchases that you want. So now we can move on to setting up our investment accounts. And these are the accounts that will hopefully enable us to achieve financial freedom, as long as we stay focused, disciplined, and apply the compound effect. So what are these accounts we may want to consider opening? Well, similar to our standard bank accounts, I would recommend opening a minimum of 5 investment accounts to start with, which again will all serve different purposes. So account number 1 will be stocks and shares. Personally, I would recommend purchasing a index fund, which will track the stock market either through funds such as the S&P 500, FTSE 100, or the Fidelity Index World Fund. The beauty of these funds is that they do all the work for you, and you can use the platforms such as Hargreaves and Lansdown, Vanguard, AJ Bell, or more unique investment apps such as Moneybox, which uses Fidelity Fund, which is what I personally use, and I have tailored my index fund to suit my investment needs. There are of course other platforms such as Trading 212 and many more available, which you can simply download from your app store. The advantage of investing into a stocks and shares ISA is that you will benefit from that tax wrapper of where you can invest up to $20,000 a year tax-free. Secondly, you should be looking at opening and investing into a private pension account. Now, you may already have a workplace pension where your employer will match what you're paying in already. However, setting up a private pension, you will dramatically increase your financial security for later in life. And the bonus with having a private pension is that again, you can tailor the fund that your money goes into. And also there's a bit more flexibility when choosing the year in which you would like to access your pension, rather than being held to a specific date that your company and its chosen provider has set for you. The third account you'll want to consider is opening up some type of an investment account, such as Trading 212, eToro, Freetrade, or again Moneybox, which is my preferred platform. Now, these investment apps are really easy to download straight from our smartphones, and the idea with this third account is to start looking at potentially purchasing some individual stocks to again reduce and diversify your portfolio. My recommendation when purchasing individual stocks is to always conduct thorough due diligence before buying, and for me, I always look for companies that have strong board of directors, a company that has vision, future growth, and perhaps is in a market that is currently fat and bloated, meaning a market yet to be tapped into. And finally, a company that is adopting and adapting to the tech world that we are rapidly moving into. Investment account number 4, and that is a crypto-based account. So for me personally, I use Coinbase. There are other platforms such as Binance and Crypto.com, but I personally prefer the Coinbase application. Again, as a long-term investor, not a trader, I cost average weekly into 5 main coins. They are Bitcoin, Ethereum, Cardano, Engine Coin, and Decentraland. I do hold other coins on a smaller scale, but 5 just that I mentioned there, I do believe are going to be the biggest when playing a role in the future currency, whether that be in the real world or more so in the metaverse, who knows. But my recommendation to anyone watching this is keep it simple and just cost average weekly or monthly. Don't look at your account all the time, and crypto is still very speculative and the market is constantly going up and down, so just invest and hold for the long term. The final investment account you may want to open is called Venture Capital Account, or also known as the War Chest. So what's this account and what's it for? Well, this account will be solely for new business opportunities, ventures or unseen opportunity, where you can take advantage of an opportunity that pops up and where you may need liquidity in the form of instant and available cash. For this fund, I would recommend drip feeding a portion of your income, perhaps every other week, or to what you can afford. Okay, so on to the last couple of investment avenues that you may want to consider, and that is investing into physical gold and silver. Now, my preference is gold, so we'll focus on that rather than the silver. And why should we be adding these into our investment portfolio? Well, for full details, I do have other videos on gold, so do go check those out. But as a summary, gold is a fantastic hedge against inflation, and more so a proven insurance policy in times of uncertainty in the market. So when the crypto and the stock market has a crash, normally gold will have a spike, and therefore it balances out your investment portfolio. And if needed, you can easily liquidate your gold into cash if you are unable to withdraw from your crypto or perhaps the stock market. Personally, I'm a big lover of gold and will continue to invest for the long term, as gold's 3,000-year history does not lie and gold will only ever go up. So finally, the very last piece of our investment portfolio, and that is having cash holdings, or also known as cash reserves. So finally, why, how much, and what's it for? Well, this answer will be different for everyone, and to be honest, this final cash holding isn't necessarily needed, but for me personally, it just adds another level of comfort that I like to have if I ever needed to tap into it. Now, what's this for? Well, it can be for anything, to be honest. Parking tickets, lending your kids money, or suddenly you get offered the chance to go to a 2-day holiday in Spain. Whatever it might be, it's just having a set amount set aside in cash, ready to go, and potentially in the range of anywhere from £100 to £500. So there we have it, a complete breakdown of all saving and investment accounts you may want to consider for the new year, or even better, get started and get everything set up now, because as the saying goes, it's not about timing the market, it's about time in the market. And my final words around investing to those who have made it this far into the video, and if you have, thank you so much for watching, is to never get distracted by the shiny penny syndrome. You know that saying of don't go chasing the big bucks into the woods, because the truth is, if something feels too good to be true, it normally is. So trust your gut. I really hope you took a lot of value from this video. Please do hit the like and subscribe button, and until next time, I will see you all very soon.